So, hello everyone. Today what we are going to be doing is something pretty interesting that I know a lot of you are going to like and might probably be able to make a good of money from. Now once again, just to start off with, just a disclaimer, this is all obviously for educational purposes. For any of you wanting to step into the markets and try and trade this, it is at your own risk, it is at your own decision-making process. This video is only going to be giving you my opinion of what I feel, you still need to be able to decide yourself. So for any of you who are brand new to the channel, my name is Morgan, founder of MS Equities Trading. What I do is I run an educational academy, train students in over 25 countries around the world. But what I also do is run an investment research firm. I also run an algorithmic trading firm where we build specialized algorithms to trade in the market for us. But what we're going to be doing in this video is talking to you about a commodities trading opportunity that I've been analyzing. The purposes of this video to you is to teach you a little bit more about what it really takes in terms of the analysis process as a trader and what are the types of things that you need to focus on to maximize your profit, reduce your risk, and come up with consistent opportunities that can make a lot of money for you. So basically what you're going to see is this is going to be quite an extensive video. So what I'm going to do is put this in a 3-part video. And what you're going to need to do is make sure you subscribe to this channel. So it's in the right-hand corner, little block. You can click on it and click subscribe. What that will allow you to do is get updated when the next videos are coming out for this trading plan alone. But what you can also do, if any of you want this trading plan, make sure to email my team, info@msequitiestrading.com. Make sure to just ask for the trading plan to the oil US Crude trading plan, and we will send it straight through to you. But let's get started. Okay, so basically in this video, we're just going to be covering what I have found on US crude trading. So basically what you can see is I've just basically said that it's the instrument, it's a commodity. The focus pair is US crude oil, so I'm focusing on US crude, not Brent crude. So basically the time frame is going to be for the weekly time frame. I identified this opportunity on the 19th of December and I'm the publisher, so I haven't had anyone contributing to this trading plan. No one on my team, I've done this myself. The other one is that the analysis process questions. So which instruments have I identified? US crude oil. What is the trading plan based on, technical or fundamental? This is based on technical and fundamental data together. The preferred instrument to trade is going to be US crude oil. And the risk divergent instruments, I haven't found any risk divergent instruments as yet. The technical analysis table timeframe, now this might be a bit confusing to you, but what I do with my students is this is part of a very special strategy. We teach them about using the stochastic and the MFI to identify extreme levels of pivot points. What you can do is go onto my YouTube channel, have a look at that. I'll just quickly pop it up here. Let me just quickly scroll over the video. So this video over here, Forex trading strategy all Forex traders should use. Make sure to watch that video and that will explain to you exactly what the stochastic and MFI is and how you can make money from it. Okay, so basically I had a look at US crude and Brent crude as well. So Brent crude focusing on the UK supply area, US crude on the US supply area. So you can see in terms of the stochastic, we're looking both way overbought at level 90 and level 91 on the weekly time frame. MFI's nearly overbought at level 77 and level 78. It's only 407 pips above the EMA. So what we're seeing is it's far extended above the EMA. What we like to see is anything between 600 to 800 pips above the EMA for weekly trading plans. So there is probably an opportunity for price to move a little bit higher before we see a pullback. Okay, so in terms of the publisher briefing, so what I basically said is the following trading plan will cover my analysis process and briefing regarding a possible short sell opportunity on oil commodities and specifically focusing on US crude oil. I've identified a correlation between strong technical analysis as well as large-scale macroeconomic as well as fundamental analysis that is contributing to the great deal of justification to my decision. So my decision obviously is to short US crude. So you can see here the analysis, we've just popped this up again, and now you can see on the technical charting what I'm going to do is run you through 3 separate charts and show you a little bit more information about exactly what I am going to be saying with regards to the charting. So basically you can see here we've got a very simple chart on the monthly chart. You can see this is on US crude oil And I've just basically shown one simple point saying that there's a $62.55 past resistance, and we're coming very close to it. You can also see that I've marked in blue on the stochastic of two separate areas where the stochastic has reached very far into the overbought region, and followed by a pullback that's reflecting on the price charts as well. So obviously what I'm just basically saying is that there is a good opportunity. The stochastic is a analysis tool we can use for this. So basically what I said is, as seen in the chart above, the monthly charts have clearly reflected a strong uptrend movement towards the previous resistance level of $62.55 in June 2015. So the previous resistance level was June 2015, and now it's only coming back to test it right now. Although stochastic levels are overbought on level 89, this might not be an optimal signal tool while trying to short an asset class that is much like a macroeconomic, that much like macroeconomics and unpredictable factors can render technical analysis on such assets to be completely useless. What I'm basically saying there is, because oil has such massive macroeconomic factors and fundamental factors impacting it, the chances that technical is going to be the only way to trade it is very, very low. You're going to need to look for something much stronger like fundamentals and macroeconomics. So basically the stochastic is a good indication to show us that this asset class is probably becoming very overbought on the monthly chart. But once again, that can't be your only decision-making process to say, okay, well, let's try and short this. What I basically said going forward is possibly the following monthly candle could form as a spinning top or doji candle to signal a pivot upon testing that $62.55 resistance level. So what I'm basically going to try and see is if the next month candle is able to form in somewhat of a doji candle or a spinning top and give us some sense of indication that it wants to actually pivot and move bearish. Okay, so basically going into the weekly charts, you can see there's a lot more information here. So on the weekly charts, what I've identified is basically the past 3 pivot points, and I'm identifying the brand new point that we're hoping is going to pivot as point number 4. So what you can see is I've also identified that the MFI levels in green, which is on the bottom part of the chart, have gone into the overbought region quite a few times. And if you have a look translating all the way up to the top on the charts, you will see quite strong pullbacks. So basically what the MFI, like I said, watch that strategy video as well. That strategy video will explain to you exactly how the MFI strategy works. But basically that helps us identify exactly where the markets are at extreme levels, and allows us to understand that there is a high or high enough probability for it to pull back. So it's just part of our justification process for us to say there is a possibility, and that possibility is strengthening as we're adding piece by piece of this trading plan together. So basically what you can see as well is I've identified that the $40 level is a very strong support level as well. So you can see pivot 1, that bearish trend after pivot 1 moves all the way down way below that $40 level, and that's obviously just because there was extreme levels in that time, maybe extreme macroeconomics that forced price back down to that level. But you can see it slowly, really well recovered, formed a bit of a Gartley, and kept on moving back up to that $62 resistance level. So as you can see, the other one is the resistance level has only been tested once before. It's now being tested again. So back in June 2015, and now it's only testing it again. So given that it's testing at such a historic level and it's testing it for the first time, there is a very high probability that we're going to see a pullback. So as you can see in red, I've basically identified that this could be a current price action range. So you can see on the stochastic as well, it is also very overbought, and that is obviously going to be another point that the weekly chart is overbought and the monthly chart is overbought on top of it. So as seen in the weekly charts above, there are many technical analysis aspects to consider that will contribute to the decision-making process of this trade. Firstly, the stochastic and MFI indicators can contribute a great deal of justification to the claim that a pivot point occurring is probable. Stochastic indicator currently overbought at level 91 and has been overbought for nearly 16 weeks, which is not only one of the longest periods shown in the last decade, but it suggests a strong retracement is imminent. And that is very important to identify, that there has not been a time that the weekly charts have been this overbought in the stochastic, which obviously is showing us that we're already approaching extreme levels of this pivot. So we're no longer in the comfort zone, we're in the make or break zone. And we'll justify that further going on. So another thing I said is with MFI levels only showing on level 76, this would not be considered overbought, but can be considered very close to the overbought zone. Given the last three major pivotal moves have occurred when the MFI was either overbought or very close to overbought, this attributes to the second technical indicator that a retracement is imminent. With the pivot points numbered 1, 2, and 3 helps reference the last pivotal bearish moves that have occurred. Point number 4 is current price value, is representing a very similar characteristics to the previous 3 points, which does suggest that there is a consistent trend developing. So what I'm basically saying here is that in the previous 3 occasions, we've seen very similar trends form up between price action, the stochastic, and the MFI. And now on point number 4, we're seeing that the same sort of trend is developing. So obviously that is contributing to the high probability of this trade's opportunity. And those are points, as you'll see, is point one by one. We'll stack on top the monthly stochastic and then the price ranges, and then the resistance levels, the support levels, the MFIs, the stochastic. And point by point, as we're stacking this up, there is becoming a high level of points that are justifying why I've come up with this opportunity. So I'll also go on to say the red area to mark current range of price is between the high of $62.55 and a low of $40.69. In many previous trading plans regarding oil prices, I've always suggested there is a possible range between $60 and $40 that may continue to be tested in the near future, which has been supported by a handful of Bloomberg analysts making the same claim in 2017. This technical range is important to consider given the public not only may see price is ranging, but this may be the first time that price moves to test the $60 level since 2015. So what I'm basically saying there is we have not only identified that the range is definitely between $60 and $40. On top of it, there has been many people in the industry that have basically made this claim that they feel price is going to continue to range within this area for a short to medium period of time, meaning in the next couple of months to maybe up to a year or two's time. So what we do know is the public knows this. So a lot of people are expecting when price moves to that $62 level that they might want to get out of their positions, or it could be a short sell opportunity. I'm not going to be the only one that's come up with this trading plan. A lot of other people also know that this could be a big opportunity. So going into when we hit that level or come close to that level, you're going to see a lot of selling off and a lot of short selling. So a lot of people are going to get rid of their trades and try and short sell and try and hold it back down within that range. So given that this is the first time it's happened, there is a big opportunity that it could be correct. So basically on the last piece that we're going to do just for this video is on the daily charts and talking about ATR and MTR strategies. Now an ATR and MTR strategy is another strategy I teach to my students, and really lucky for you, this is actually a strategy I've put up on the YouTube channel. So what you can do, let me quickly put up this video here for you. We are looking at this video here. Okay, so learn to swing trade Forex strategies 9 steps. So that is first part of the ATR MTR strategy. And the second part is interrange trading with Forex, great trade idea included. You can see both of those videos are posted up right here. Make sure to go and watch both of those. It will clearly explain to you exactly what the ATR MTR strategy actually is. But going back to it, basically, as you can see, as we've identified this range between that $60 and $40 range, and we've identified that the MTR is 3,722 pips and the ATR is 2,034 pips. You can see at the same time we've identified ranges T1 through to T7. So basically what I've done is I've numbered the ranges. So you can see that T1 is trend 1, trend 2, trend 3, 4, 5, 6, and 7. So I just made sure to number it to show you visually exactly what I was going to reference back to. So basically I've just said the chart listed above lists an incredibly vital analysis tool to measure price movement of trends and ranges on long-term trade opportunities. The current trade analysis has been used as price action is currently moving within a range from $62 resistance levels and $40 support levels. So you can see the ATR, MTR measurements the title or number is going to be here. Please make sure to watch that video, don't forget, so you can at least understand this. But T1, all of these, I've measured the distance in pips and periods. So how many periods occurred on the daily chart, meaning how many days have occurred. You can see over here, we have got the measurements. So the ATR and MTR measurements. You can see we've traveled 2,109 pips on the first opportunity, then 3,500 pips, 2,500, 1,250. What I did is I took the last 7 trends that we have seen and I averaged them out. So the average, or the average true range, so the average distance that the last 7 ranges have traded is 2,034 pips. Now 2,034 pips you'll see is quite a significant number. The maximum range, so the longest any opportunity ran, which was on that previous level where it oversold way below the $40 level and then came back up and formed a Gartley when it went back into that range. This trend was 3,722 pips long, so it was very long, but the average range is 2,034 pips. The average duration is 98 periods or 98 days for these trends to form. So these 7 trends averaged 98 days, and the longest one was 166 days. So you'll see down here, I've got a very nice thing about the ATR and MTR. So I said for clarification, the table above is referencing price distance measurement on the daily chart listed above the table. Each trend is labeled T1 through T7 in chronological order. Range T7 is highlighted to reference the most recent range to date. So T7 is the range we're currently in. So T8 is what we're hoping is going to be the next range pulling back down. So the next one is, given the MTR is close to double the length of the ATR, the exposure difference is incredibly high. This could possibly lead to the following pivot being much further extended than expected before retracing back within the ATR. So as you'll see in those videos, those strategy videos, I talk to you about extending beyond ATR and MTR levels. But what I'm basically saying is that if the ATR is 2,000 pips and the MTR is double the height, the chances that when we get to the edge of that ATR, there could be price moving a little bit further before we see a retracement back within that previous range. Now, this is also something important that you need to understand, is in terms of risk management, which we'll do in video number 3, you have to be very, very careful. So going into the next one, given that T7 has traveled a distance of 1,853 pips since the previous pivot at $42, it has filled nearly the entire distance of the ATR, which suggests there's a probability that a pivot may occur shortly or within the next 200 pips. So like I said to you, the ATR is 2,000 pips. So the last 7 trends have formed an average of 2,000 pips move. The current range is moving at 1,800 pips, which suggests that we're very close to the end of that average range, knowing that there's a high probability the price is going to pull back. Given that T7 has already traveled 137 periods from the previous pivot at $42, its current price at $60 has already far exceeded the average duration and has now begun to travel towards the maximum duration of 166 days. So what we do know about this last comment is the current average duration is 98 days on the last 7 trends. The current trend has already traveled 137 periods or 137 days. So we know that we're already getting to the end of the maximum duration that a trend is usually traveling. So what this helps us identify is not only that we're getting to the edge of the ATR, it also makes us identify that we're very close to the limit of what the normal maximum trend usually lasts for, which also makes it a lot easier for us to identify that a pivot is very imminent. Once again, everyone, like I said to you, this is going to be only part 1 of a 3-part video to make sure these videos are not too long. Make sure to tune into the next video coming up very, very soon, within 2 days' time, about the fundamental analysis and everything I found around that opportunity. And then video 3 is going to be talking to you about risk management. Make sure to like and subscribe if you want to keep updated with all of these videos, and I'll see you in the next video. Cheers for now, everyone.